Hello, we're Team G. We present our equity research of Yandex NV. We rate Yandex to be undervalued and issue a buy recommendation with estimated median target price of 5,379 rubles per share and upside potential of 17.9% relative to the fixation date price of 4,561. To arrive at fair value of the company, optimistic scenarios were used to account for the Russian government support of main services of the company.
Yandex is a Russian TMT company established in 2004 in Netherlands. It comprises of 6 main business segments: search and portal, taxi group, media, e-commerce, classifieds and bets and experiments. Today, Russian market generates the largest portion of revenue, 93%, while other 7% comes from CIS and Europe. We can observe positive historical dynamics in overall performance, where search and portal brings the majority of revenue, 52%, and taxi group is the second largest revenue generator with 28%. We expect the Yandex to continue to develop the ecosystem in which it will be shifting its core business from search and portal to taxi group. It also will develop e-commerce and fintech as part of the ecosystem. We believe that e-commerce and other bets and experiments will be the main growth drivers for other segments. The business model is built on pay-per-click basis. The segment's revenue consists of 85% from online advertising and 15% from the network. The revenue from network decreased by 5% over the last year. We expect this segment to be the largest part of revenue for 5 years, and its growth in revenue will be at 4.4% CAGR, and in share of revenue there will be a decrease at 7.7% CAGR. The business model is built on commissions in ride-hailing and deliveries and adjustable fees in car sharing. Yandex owns 61.7% in taxi group, and other share belongs to Uber, which Yandex plans to repurchase. We expect the taxi group to bring 67 billion rubles in 2020 and to become the largest business segment by the end of 2023.
In order to conduct financial analysis of Yandex, we used Yandex's financial statements, official SEC filings, and team's own calculations. The first peculiarity is found in Yandex balance sheets. As the graphs of years 2015 to 2020 show, Yandex has a very specific capital structure, with the majority of the structure being equity. This leads to another important observation. The asset structure depicts an allocation of equity financing primarily into liquid assets, cash and cash equivalents, short-term deposits and other current assets. Such tendencies to capital and asset formation are a historical trend for Yandex. According to the company itself, they aim to keep their net cash reserves high. These points lead us to conclude that both capital and asset structures are arranged in a way which follows Yandex's strategy. Large net cash reserves reveal an interesting picture when looking at the liquidity ratios. None of the ratios that we calculated fall below the value of 1 throughout 2015 to 2020, as shown on the slide. High liquidity ratios are not the result of an aim towards keeping the company able to cover its current liabilities. Instead, liquidity serves a different purpose: to finance small M&A deals. Large M&A deals in turn get financed by issuance of convertible bonds. The periods of debt issuance correspond with years of conducted large M&A deals. Exceedingly large liquidity ratios, meanwhile, become a side effect of these financing strategies, rather than being an immediate goal of Yandex. Next, an overview of other important ratios: profitability ratios and margins. When looking at the return on assets and return on equity graphs on the slide, a downward trend becomes apparent. As for the margins, namely EBITDA margin and gross margin, we point out a gradual decrease overall throughout the years of 2015 to 2020. Our team considers both of these trends to be a result of Yandex's diversification into more expense-heavy industries, such as ride-hailing, food tech, car sharing and experiments, from a cheaper to sustain search engine and portal advertising segment.
Now we will go through each division's market separately, starting with search and portal. This industry's main has high barriers to market access. As a result, Google and Yandex account for 98% of the market. Mainly, companies generate their revenue from advertising and compete for users. Both industry giants had shifts in leading position, but according to estimated trend line, Yandex is losing its share, and current 40% can shrink to 36% in first half 2021. Nevertheless, we believe that Yandex can retain its position amid enacted pre-installation application law and by improving services usability. Ride-hailing industry is poorly fragmented. Top 3 companies account for half of the market, with significant presence in Central Europe and Russia. Yandex holds a leading position and keeps the opportunities to thrive even faster, given incremental investments in B2B and B2C logistics, car sharing, self-driving, and developing ecosystem. Food delivery market is seeing accelerated growth due to changed customers' behavior caused by COVID-19, but growth opportunities make it harder to compete, as for example, large offline retailers are starting entering this market with cheaper private label products. Yandex holds the second largest market shares of 10%, giving the way to Delivery Club, but with great opportunities to beat the roof. Media market is a major underpenetrated opportunity in tech space. The main trend is moving from advertising-based monetization to subscription products. We believe developing Yandex Plus subscription with ecosystem features has significant upside potential, allowing to capture a notable share on the market. Russian e-commerce market is underpenetrated and highly fragmented in comparison US and China markets. The main trends are investing in developing own logistics solution and consolidating with smaller players. Given recent events of buying out market and integrating Beru with it as the first step of unlocking ecosystem synergies, we believe that Yandex can change its position in near future and become top 3 companies in the market by the end of 2023. Other bets and experiments should be divided into 3 categories: cloud, self-driving cars markets, and other projects markets, which are mainly reputational caution. COVID-19 has accelerated the shift towards cloud solutions in Russia, and Yandex, being a potential beneficiary, can leverage its ecosystem synergies and become a top player on the market, given strong technological base. Self-driving cars market is very attractive for big tech companies, but use of such technology is questionable in the near future, as legal environment is not prepared. Yandex could become one of the top market players not only in Russia but globally, given technological advancement and overall progress since the inception of the division.
According to market approach valuation, Yandex is undervalued relative to market peers. Core business and sum of the parts methodologies were used to value the company. For core business valuation, comparable companies with similar core business and relatively similar portfolio diversification were chosen. For sum of the parts valuation, appropriate comparable companies with separate criteria considering main business segment were chosen to value each sector. EV revenue and EV EBITDA were chosen as multiples to value each company. EV EBITDA multiple was neglected in sum of the parts valuation due to zero or negative EBITDA metrics for Yandex and most of comparable companies. Also, comparable companies for every valuation method are publicly traded. According to income approach valuation, Yandex appears to be undervalued. Yandex EV was calculated using the sum of the parts method, with search and taxi segments valued through the DCF model and other segments valued using the exit multiples method. We arrived at EV of approximately 2.19 trillion rubles and equity value of 2.18 trillion rubles using the bridge. We estimate an 11.9% WACC for the forecast horizon and 12.2% for terminal horizon.
Yandex faces 2 major risks. The first one is competition, where Google is actively displaces Yandex in search, and Sber, Mail.ru and MTS develop the same services in its ecosystem. Another risk is segments development, where Yandex is still highly dependent on revenue from advertising and it lacks fintech.
To sum up, we believe Yandex aims to continue ecosystem development and has great potential to dominate the ecosystem market.